What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and today, as usual, we're going to be going over the charts, starting out with the Dow, moving on to the DXY, and then, of course, Bitcoin. And we are going to be talking a little bit more towards the end of the video about the amazing roadmap that could be right in front of us with tons of opportunity in it. So make sure you stick around to the very end. I have a whole new chart. It's still the Amazon compared to Bitcoin chart. I'm going to show you a whole new way to look at that. It's pretty damn amazing, so definitely stick around for that. Before we begin, make sure you scroll down, smash those thumbs up. It is appreciated. It helps push the channel out to other people so other people can get these ideas. Also, make sure you subscribe to the channel if you haven't already, and make sure you tick those notification bells. It will notify you when I post new videos. I do post new videos Monday through Friday. I may do the membership video today. I know my wife just gave me a to-do list, so if I get that done, I'll be doing a live for the members, and you can join by hitting the join button below the video. So anyways, let's get into it. Let's see what's going on. And so we've been watching this falling channel in the Dow, and as you guys know, the bottom of this channel lies around 28,000, 28,100, depending on how long before we would get there. But anyways, if we do break that, we do have a measured move all the way down to the 22.8 range, possibly lower if it takes longer. Actually, we will put that down around the 27.2 or 22.7, somewhere in that range. But this can all get invalidated if we break the top of this channel, which is around 33.3. Although I don't think we're going to get there. We will take a look at the smaller time frame, or the smaller channel within it. You see this rising channel. We had a measured move from where we broke this channel right here. That gets us down to about the 27,000 range. Now, if we do get down there, that will break the bottom of this channel. We'll probably get a bounce back up to retest this channel, but then we have that measured move much lower, right? That's if that plays out that way. If you guys watched yesterday's video, we talked about this being our major point of rejection at 30,885 before it even happened. And you can see that's where we got rejected, right in the center of this falling channel. Now, if we were for some reason to get up and break this high today, our next stop would be 31,350 or 31,3, right in that range. If we get above that, that will invalidate this rising channel, right? It still doesn't invalidate the falling channel, but it would invalidate the rising channel. Oh, one more thing. I did tell you guys that I would tell you a little bit of my life story today. As most of you know, and for those that don't, 12 years ago, I was deep into my alcoholism and drug addiction. And I just want to let you guys know, anyone that's having those issues or know someone that is, it's not the end of the world. You can come out of it. My life has changed tremendously. I'm going to do a whole video on it in the future and just kind of walk you through my life for those of you that are interested. If you're not, no big deal. But for those of you that are, I will be doing a video on that and show you how life-changing it can be. And people always say, do you regret your past or whatever? I do not, because I wouldn't change a thing. I'm here, and everything that happened in my past was a learning experience to get me to where I'm at today. So hopefully that'll help some of you out there, but I will be doing a longer video on that and putting it out there, so, and kind of tell you a little bit about my journey. So anyways, right now we're still getting rejected at this trend line. So as you guys know, macro, I'm still really bearish on the Dow. And the DXY, we are getting our bounce here, but remember, we can still come down and test this bottom trend line. And if that happens, that's going to be around the 111 area. If that happens, we'll probably get another little small rally with Bitcoin. But I do believe if we do that, we're going to get a massive bounce off it like we do every time we hit that trend line. If that breaks, we look at the bigger picture. No matter what, we're still extremely bullish on the DXY. I've been that way for over a year, and I've showed you guys why. But if you look here on the daily, we've broken this massive trend line right here. And even if we were to break the 111 range, we'll still be getting a bounce down here before this 110, in my opinion. I know it looks like it's going straight up there, but if you look back here in the 80s, did same type thing, but we got a lot further we can go, guys. And looking at the big picture, here are my big targets for the DXY. We've had them here forever. And as you can see, this is the measured move of the breakout of this rising or this falling wedge. Put it over here to the breakout, gets us up to about that 178, but we do have more resistance coming before then. My next major target for resistance is around 122. We'll probably get some rejection there, but once we get above that and hold support, you guys know my next target is new all-time highs for the DXY. For those of you that are interested in trading before we get into Bitcoin, definitely check out Prime XBT, by far my favorite exchange. They don't trade against you like all the scam exchanges. You don't get all the scam wicks. Definitely check them out if you haven't already. You can trade the Dow futures. You could trade S&P, Forex, gold, silver, pre-markets, post-markets, all from one exchange. Definitely check them out if you haven't already. You can use my promo code Savvy50. That'll get you up to a $7,000 bonus to add towards your margin. Savvy25 will get you 25% off of your fees. I do have a link down below you can use. Also, my Twitter link and all that other stuff is down there. So there's a lot of fake Twitter accounts out there, guys. Be careful. There's so many scams in this whole community, so just be careful out there. All right, so looking at the daily, we were looking at this falling wedge, which we broke out of, came back down, retested. I no longer think this is too valid anymore, but what we are watching and have been watching is this falling or descending triangle, right? The bottom of this is around 18.1, 18.2. If that breaks, you guys know my next target, and that's all according to the weekly, is around this 14.5. And if you look at the RSI here, I drew this in yesterday. As long as we stay below this blue trend line and we break this bottom white trend line, so that would have to close a daily. So if this RSI closes below here, then our next target for the RSI is this little trend line here, which I don't think will hold long, might bounce around in there for a while, but we have a measured move way down into around the 13 to 14 on the daily RSI, right? So what is the major target here? So if we take a measured move at the widest point of the triangle, and if we do break down over in this area, that's going to get us around to that 34, 3,500 range. Now, if we were to hit that this year and capitulate that far, I would definitely say that was probably the bottom, and the 4-year cycle will continue. But I think it's going to be different than that, and I showed you guys that. I think around this 75 to 8,500 by the end of this year, get a big rally into next year. Maybe not even here, actually, the 75 to 8,500, if it plays out, like I'm going to show you in the final chart here, the new chart, that it's probably going to be in February or March before we get our false bottom. Then we'll get a rally, 100% rally, probably up into 14, 15,000 range, and then a continuation down to new lows next year. 2023, middle or end of next year, if this plays out. Remember, this is not financial advice, but so far, our calls have been dead on. And I know a lot of people like to look at the little time frames, guys. Focus on the macro. And those who day trade, if that's your thing, have at it. Swing trading is much safer, a lot easier, a lot less time staring at the charts. Although, if you are getting into trading, you're gonna wanna spend tons and tons and tons, thousands of hours staring at charts. If you're just relying on someone to make a call and then you trade off their call, and you're not learning anything, you'll end up losing everything eventually. If you buy someone's course, all you're buying is their bad habits, because obviously they're not a good trader if they are selling courses, because if you're a good trader, you can make money all the time. So it's not, you're just buying their bad habits. That's how they're making money, is selling their courses, not by trading. So just so you guys know, I like to put that out there for those of you that, if you do buy courses, all you're doing is buying stuff you can find for free anywhere. And you never really learn until you get in and dig in, and you're gonna lose money. That's just how it goes. So don't risk a lot when you're learning. Start out with fake accounts, then start out with really small accounts. The market's not going there. You got forever to learn. Yeah. So anyways, this is what I'm looking for, as you guys know. And if we look at the weekly, well, let's go into the 4-hour first. So looking at the 4-hour, what are we seeing in the 4-hour? We had this point of rejection. I put that up there Monday for you guys. And that's exactly what we got. And so far, so good. Now, what are we looking for? Well, to break back out of this, get it open and close above the 19,460, 19,4, somewhere in that range. Get it open and close of a 4 hour above there. Then we have our 200 EMA around 19,6. And let's look at one more thing over on this daily I forgot to mention. So if we do get a wick above this, look for a rejection right here around the 20,000 range. That's going to be our 55 EMA on the daily. Unless we get an open and close of a daily above that, I'm not looking for any higher targets. Let's go back to the 4 hour, see if we can see anything that really needs to be looked at. Not really. We can take a look at this as a bear flag that we broke, and that gets us a target of around 18.7. That may be our next area we get some bouncing. But remember, once we get down here, we may bounce around for a while at this area, but once it breaks, I'm looking for that 17.5, and here's why. That is my target on the weekly, and that's just a measured move of this rising broadening wedge that we broke out of. Still think we're going to get down to this range, 14.5 to 15,000, maybe get some bouncing around in this area, but nevertheless, a continuation to the downside in the macro, right? Unless we do a fast one, like I said, then we could end it this year, although I don't even think we're going to get down to these ranges possibly until February or March if it plays out like the Amazon to Bitcoin comparison chart. Now, the other way we found these targets here, right, is this one here. Same as we used up here, this rising channel. We took the measured move. We called this before anybody else down to this 25,000 range. And then we took that, looked at this here as another bear flag. We took that measured move, called this way before everyone else at around 17.6. We nailed it. And then looking at this one gets us down to that 75 to 8,500 range, right? That's where I get that target. Then this final target, that 35 to 4,500, that is a measured move from the break of this major trend line here down to this low, looking at this as the bear flag, and that gets us down to around 35 to 4,500. As you guys know, this is my Bitcoin compared to Amazon, the .com bubble chart compared to the Bitcoin bubble chart. Well, I warned you guys in the beginning that once this happened, we would hit lows. Then we would get rallies. Everyone would get bullish again, saying we're going to new all-time highs, only to come down, make a lower low. And at each high up here, just making a lower low, and people wishing they would have sold at the last high all the way down. And that's what usually makes people hold through bubble pops or major bear markets, because every little bounce gives them hopium, and they think it's going to continue up from there. That's all market psychology. That's how this all works. And people that say you can't compare one Amazon with Bitcoin, yes, you can, because it's just a chart. It's just a market. People are in markets to make money, and they always play by the same rules. That's just how markets work. That's why you see the same patterns over and over. As you can see here on the weekly, this was the false bottom over here for Amazon, which I think will be sometime, like I said, February, March area. We'll break this trend line like we did over here on the weekly. Let me move it over so you can see it. Right here, everyone got super bullish. That's the end of the bear market. It's going to the moon. This was like 120 or 140% rally, something like that. Doesn't look like that on the macro. That's why I say keep an eye on the macro charts. But everyone obviously got bullish, a lot of buys in here, and that was liquidity for these guys to sell into for one last high price they could sell it before crashing it down and buying the real bottom, which would be that 35 to 4,500, maybe even lower, who knows. But I don't see that happening until the middle or end of next year if it plays out in the same time frame. Now, this was the other chart, the bigger picture. As you guys know, it took Amazon 10 years to break the all-time high, and it is looking very similar. I'm going to show you in the next chart. I'm going to overlay it so you guys can see it. But if this plays out this way, look for, 35 to 40,000 sometime in the middle of 2025, kind of like we did over here. Actually, it was towards the end, so that was in October. So this may be, mid to end of 2025 to get this high, then another crash, and it will still be a 4-year cycle, right? But it's not a new high every 4-year cycle. I've tried to explain that, and I'm not saying it can't, but I'm saying look at the big picture. Be careful. Don't just be putting all your money into something hoping that it goes up. It's not guaranteed like a lot of people are talking about. Now, this is the Amazon weekly chart, and I'm not going to move the time frame or none of that stuff. I'm going to copy this, and then I'm going to put it on top of Bitcoin. I have Bitcoin over on the side. So let's do that. If we take this here and we just copy this, right? And then I'm going to move this over. This is just a copy. I'm not going to change anything. I'm just going to bring it right over to Bitcoin, right? And take a look at this. We talked about this ABC correction, although I didn't think it was going to go that high. But once we did, I made the video on December 2nd talking about this happening, right? Because we had an ABC correction here. Irregular correction. We put that, we overlay that. And if you look at that, guys, it's almost perfect, identical. Like I said, in the macro is where you keep an eye on this. And this gets invalidated if the weekly 55 EMA gets broken. But until then, this is valid. And it's going to be somewhere a little above 30,000 if it was to happen quickly. But that 55 EMA is dropping regular. But as you can see here, if this was to happen, we have a long ways to go before the new all-time high is broken, you know, sometime in 2030 maybe. But the thing is, there's major opportunities if you learn how to trade. Tons of opportunities this whole time. You got, you know, still a lot of shorts to make money here. Then you got some longs, some little shorts in here. These take time. They're not gonna, it's not gonna spike up in a day, spike down in a day, spike up in a day. I don't see new all-time highs in 2025, guys. I could be wrong, but I just don't see it. If that's what you're depending on, just be careful. It could happen, you know, hurrah, but protect your capital, people. This does happen like this. This would get us the bottom sometime in the middle or end of next year, like I had said. And then right here, middle to end of 25. And then back over here would be the middle, actually, yeah, middle of 2028. So this would be 3 years of down with lots of opportunities, guys. If you look at this bump up here is February to June. So that's 3 months of upside. And then you have from June to October right here, 3 months or 4 months, whatever, of downside. There's tons of opportunity there, guys. Practice trading. Markets aren't going anywhere. It will always have opportunities. You have tons of time to learn how to trade before you actually jump in and start trading. Get a profitable strategy. Stick to your strategy. Learn risk management. Don't risk more than you're willing to lose. Be careful out there, guys. Thanks a lot. Tons of opportunity coming. We will be keeping track of it on this channel, so make sure you smash those thumbs up and leave your comments below. I'm out of here. Have an awesome day. I will see you in the next one.